Good Tuesday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming in and checking out the Market Chameleon pre-market show with the main man. There he is, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Yep. Just so everyone knows, today's a Q&A day. So if you have any questions about Market Chameleon, please bring those questions over so we can answer any rough patches you're having with Market Chameleon or any questions you're seeing in the market today. We do have a link there. Click on that link. You can click over to the Zoom meeting. That will allow you to ask your question live. If you raise your hand, I will put you on the voice and you can ask your question live. So that would be great if anyone has a question, wants to come over today. What do you think, D?
Yep, sounds good. And
you want to start with the disclaimer?
Yeah, do you want to do it today?
Do the Q&A?
Disclaimer.
Oh,
okay,
the disclaimer. Yeah, no, the disclaimer. Listen, everyone, please read the disclaimer. It's up for everyone to see. I'm not a registered investment advisor or broker dealer. We do not make recommendations. This is for informational purposes only. If you do have things you need questions answered about, please contact a registered broker dealer. Anything to add to that, D?
No, that's fine.
All right, perfect.
Yep. Thanks, Will. And let me share my screen real quick. Yep. And what we'll do is while we're waiting for any questions to come in, Will, either through the live chat or through the Zoom meeting, we'll start out with the pre-market report and just discuss kind of like what's going on right now in the marketplace. Maybe I'll take a few questions that I get over on the emails, cover those. But if we do get a question, stop me and I'll take those questions because that's why.
Well, I have a question right away.
Sure.
Is that stock really up 500%, or is that I know occasionally
that could be a reverse split. I got to check. Maybe sometimes there are reverse splits, and if we don't catch it in the morning, we have to we catch it later on. So that could be a reverse split. I'm not sure.
Yeah, cool.
I'd have to look into it. But while we are waiting for questions, to queue up, we'll take a look at what else is going on in the pre-market hours. And again, we do this show just to take questions from you guys. So any questions you have, let us know. We do other webinars and instructional videos out there, but this is a chance for you guys to ask questions. So let's start out with the pre-market report first. And these are stocks trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. I see 60 stocks made our percentage gainers list, 131 on the decliners list. So right now, from that perspective, we're looking like a more bearish bias at the open. What I'm going to do is filter out this list to just S&P 500 stocks. This will take out any small cap stocks, ETFs, leverage products, preferred stocks. Let's take all those out for now and just focus on S&P 500, see what's going on there. And to do that, we're going to use this filter in ETF. I'm going to drop it down. I'm going to select one of these ETFs, which I'm going to do the SPY, which is the S&P 500 ETF. By doing that, this will filter out the list below by holdings in SPY. So these are S&P 500 constituents, which, by the way, we have this filter on, I think, either all or most of our screeners. So you do stock screeners, option spread screeners. You'll find this filter if you wanted to just filter out components of a certain ETF. Here, though, we do see 5 stocks made our percentage gainers list, 26 on the decliners. So not a very huge list, but it is more of a bearish bias at the open. And I think a couple things also. Well, what's interesting is that when the markets get indicators that maybe inflation is starting to slow down, maybe prices are not moving higher, anymore in the housing, in the cars, and so forth. So they're taking that as a positive indicator that maybe what the Fed's doing is working, slowing down the inflation. But it is at a cost, right? Where on the flip side is the cost of it is it's slowing down the economy. So the prices are not moving up, but also the activity in the housing market is moving down. Activity in other places is starting to move down. So they're doing it by slowing down the economy. And the one thing I'm not sure how much importance they put on, but they are looking at the labor market, and the labor market is tight. There are more jobs available than there are people to fill those positions, and that creates inflationary pressures too. They might be looking at that and then easing up, pressures there. So they could be targeting also the unemployment rate. What do you think, Will?
Yeah, I think you're absolutely right. I think you're
Which
absolutely
further
right.
weakens. Yeah. And, because that is one area that we've heard from the Treasury Secretary, we've heard from the Fed officials that they're watching closely, that unemployment rate very low, labor market very tight. That creates inflationary pressure. So if they're targeting that, we could be sitting here waiting till there are changes in there. So they're looking at a lot of different stuff there, just to keep that in mind. One thing that does come up, if there are no questions yet so far, Will.
Well, someone's asking that there were what's going on with Uber, and I think it's the earnings. I don't know if you can take a quick look at Uber.
Right. So I do think that, and I didn't get a chance to read their report. I did see that they came up. I saw Lyft and Uber. They had a pretty good report. I think that their revenue doubled, something like that, but I
think their cash flow is now positive for the first time too. Maybe tomorrow we can look at the fundamentals when we have a chance to look at it.
Yeah, but they did report earnings right here. We go. You see here, they reported earnings. And if you wanted to go read it for yourself, if you go here to release dates, these are the historical earnings. So you see here, August 2nd, this is the most recent. That's today before the market opened. And we have a link here to the press release. So if you just click on it, that will take you to the press release over here. Uber reported earnings. They're giving you highlights. They're talking about, what happened. Here's revenue doubled year over year, 8.1 billion. And I'm not going to sit here read through it. If I skimmed through it earlier, I'd give you some of the highlights. But here we go. They're also giving us an outlook, right? So they're giving us forward guidance, and you could see here, you could read through it, what they're guiding and so forth. But since I didn't go through this yet, I don't want to stay here and kind of read it as we're doing the show.
Yeah, no, we can take a look at it and maybe go over it tomorrow. Maybe it's worth looking at the fundamentals.
But here's what Will's talking about. Free cash flow went from negative to positive, right? Adjusted EBITDA went from negative to positive. So all good here. Revenue growth, 105%. So you go from 3.98 billion. So there looks all good. Again, I'll take a look at it later on, maybe discuss it tomorrow from a fundamental perspective. But this looks to me like it's all, earnings. That's a reaction to earnings. And I think Lyft is up, in sympathy with that.
Perfect.
So let me close that out. Another place, actually, if you go to the earnings calendar, as we're talking about it, if you're on an earnings calendar over here, these are today's. Some stocks are already reporting today before the market opens. We could even filter those out. So see time of day. We could say today before market opens. And here are a list of stocks expect to report today before the market opens, August 2nd, before market opens. When they do report, we pick up the press release here. So here's the press release, SPGI, Caterpillar. If you click on this, it'll take you to the press release, so then you could go and read about it. And really, as a trader, you should get into the habit of reading, about stocks that you're following and really knowing the fundamentals, the key metrics, who the management is and what they're saying. But here's S&P Global. This is their press release. You could go through it and read it. And some of these, things we do talk about during the show, some of these metrics. Another thing we do put on this calendar that's very important is the conference call. If they're having a conference call and they give us a time, we put it in here. So here's this company. They did report earnings 8 a.m., but they're having a conference call at 10 a.m. So that's after the market opens, right? So it is reacting right now. We see stocks up 1.2%, but they're having a conference call at 10 a.m. Management's going to talk. We don't know what they're going to say, but that could be also another market moving event, because they could tell us about something about forward guidance, what they're seeing, anything new coming up that hasn't been issued in the press release. That's to be aware. So you should be aware of that. And here, this is just a comparison, what the options expected, the move to be up or down. So this is looking at options. If you buy a call, buy a put, you pay premium for both. The stock has to move by a big enough percentage to cover the cost of both the call and the put. So that's what this is versus the actual move, right? So this is, remember, actual move up or down. Doesn't matter which direction, it's the magnitude of the move. Let me see. There are no questions here. There's a Uber I was looking at. So there was the Uber one.
We did have a question about, and it was more of an observation, but maybe you have a feeling on it, from Ronald Fields. He was asking, I have noticed watching the option order flow sentiment that a lot of times the opposite happens. For example, if it's a buildup of pressure building up on the stock, will be moving down, vice versa. My question, how should I view the screener? Is there an example, or that I don't get, Ronald? Maybe if you want to come on and ask it exactly what your question is on the screener. It reads, screener, is there, for example, is there someone trading against those orders?
Right. So Ronald's question is, I'm looking at the option order flow sentiment over here. So here's option order flow sentiment, SPY. So yesterday we had, what we're seeing is that on balance, we see that there's more shorts than longs and 3.5 million deltas. So what we're doing here is looking at the option orders. There's a buyer and a seller for every option, right? What we're trying to interpret is, what is the dealer doing versus what is the order flow from the customers. So the customers come in, buy a put from the dealer. So the customer is trying to get short. The dealer sells the put. The dealer is trying to make the spread. But to hedge that put, he would have to sell short stock to hedge the delta by the amount of the delta of the sale. So that's basically what this is trying to interpret. How is the order flow more bearish or bullish? And it's very important to know, and I do repeat this, that it is not a forecast of where the stock is going. It's telling you how people might be feeling and what the interpretation is of the trades that are happening now, right? So nobody knows what the stock's going to do today or tomorrow. We're just trying to see what the pressure is building up today, because that pressure is on the broker dealers or the dealers that are taking the other side. If they're hedging, their deltas, they would create that pressure, right? If they're buying a lot of deltas, then they would have to sell short stocks, selling a lot. And from day to day, it's normal activity. It's not unusual, right? It could flip long, short, and news is changing from, it could be minute to minute. So this could even flip. But here, what we're seeing is on balance, here we see that the order flow, we calculated 83.4 million long deltas versus 86.9 short deltas. So on balance, more people selling deltas than buying deltas. Okay. And here you could see how it progressed throughout the day. Right. And it's just one piece of information that you're taking in your entire analysis. Well, what are other people doing? Am I agreeing or disagreeing? But you're trying to take a look at, in the essence of the order flow. Here we see the average price where the stock was when for the weighted average price where long deltas were established versus weighted average price of short deltas. And then it gives you a breakdown. How are these, where are the deltas coming from? It could be buying puts, selling calls, selling puts, buying calls, vertical spreads, and so forth. So this gives you a breakdown. That there were more deltas from selling puts than buying puts, but more deltas came from selling calls than buying calls. So to me, it looks like, just really quickly over here, that there are more sellers potentially, of deltas from just selling options, calls and puts. But there's an imbalance coming from here where there are more call sellers of delta than buyers. And here you could see that a lot of these are expiring options. So these options expired yesterday, right? That no longer exist today. So you could see August 1st, more sellers of the Augie 112 calls. That was probably yesterday, right at the money. And why would they be selling it? They could be, a lot of people who were long calls might have been just using it as an opportunity to close out, or people were just selling them against their positions, maybe thinking that it's not going to break through 112. I'll sell those calls against my positions, or whatever it is, but that's, the net imbalance, right? So devil's always in the details, right? You could see here, 111 puts, there's a long delta, 112 puts, long delta. So a lot of selling options around between the 110 and 112 strike, even 113 strike. Right, so that's all these are expiring. Top 10 options, all from expiring options. So yesterday, just looking at the top 10, to me just looks like a lot of options selling around at the monies with an imbalance more towards the short side. All right, and all these options expired yesterday. Does that help? Will, you're on mute.
Sorry about that. That helps.
Okay. So let's see what, I only have 10 minutes. I was going to talk about valuations. I did get a question about theoretical values and valuations, but I have 10 minutes. I don't know if I have enough to get into it. So I might leave that then for tomorrow.
All right, we have someone who wants the Zoom ID. I put that out there, Ronald. If you go to the top, it's and
if you go on YouTube,
what's that?
It's on you when you're on YouTube, it's where the live chat is, right?
Yeah, it's like the third line down at the start of YouTube. I'll put it in again right now. Just give me a second.
Okay. Yeah, I guess I could wait. If he wants to come on the show, then we'll wait. for that question. So again, option order flow sentiment, it's not a prediction of anything of where the stock's going. It's looking at how is the pressure building up and what are potentially the other side, what are the dealers, what are the potentially the dealers holding now as risk.
Actually, your mic just went underwater. I don't know if you want to plug it.
How's this?
That's perfect.
Okay. While we're waiting, I guess, to see if, who's that, Ronald?
Yeah.
I'll talk a little bit. Yep.
I just put it out again, Ronald. Click on the link at the bottom. I apologize. That link I sent out before was not working.
So while we're waiting, see if he pops in, just really quickly, I'll go over valuation models again tomorrow. But when we look at what valuation models, theoretical values, I think a lot of people get confused with a theoretical value and a forecast of where stock is going to go. And those are two different things. Theoretical value is trying to assess, what do I think, what do I think the fair value is of this security based on today's information, right? A forecast is different. A forecast is saying, what do I think, the circumstances going forward, a year, 2 years, or 3 years from now, what do I think is going to happen, in the future? And those are two different types of models that people run. So theoretical, for example, if you're buying a house and you want to borrow money from the bank sends an appraiser to get basically what do they think that the value of this house is worth. The bank doesn't try to forecast what the house will be worth 5 years or 10 years from now and give you a loan based on that, right? They say, what is it worth today? And that's what a theoretical value is, theoretical model trying to do is basically say, well, given all the information available, what do we think the price of the security is worth today? And then it compares it to the market prices, right? So, well, is there somebody in there now?
Yeah, Ronald. Ronald came in.
Okay, I'll take a question.
All right, Ronald, I'm going to allow you to talk. Just make sure you turn on your mic. Here we go. Welcome, Ronald.
All right. Are you guys able to hear me?
Yep. Hey, how's it going?
All right. How you guys doing? Good morning. The question I have for you was with the option order sentiment was a lot of times I'm noticing the day, so the stock is moving up, the order flow sentiment will be moving down. I see a lot of bearish pressure. And that'll be happening most days. It'll be about a 4 or 5 day stretch where the stock will be moving up, but the order flow sentiment will be moving down in a bearish. So my question was, and you kind of answered it with the dealers. So are the dealers trading against those orders that are coming in? So for example, if I go to small retail, is bearish, but I'm noticing the stock is, being pushed up,
Right.
So
right.
Should I interpret that as the dealers are trading against those orders?
Right. So the way the option order flow sentiment works is it tries to look at, it divides it into two buckets, right? Because there's always a buyer and a seller, right? So since you have a buyer and a seller, there's no bullish or bearish. So you can't, it's just a meeting of the minds. Right. But what we look at is, what do we think, the dealers are doing versus the customer? So when I maybe a way to explain it is like, here's a car dealership, right? In a car dealership, they're in the business of buying and selling cars and making a spread. So they buy a car at one price and sell the car at a higher price, and they make that spread. So what we're trying to determine is, well, are a lot of people coming and buying from the dealer, or are a lot of people putting pressure and selling to the dealer, right? Because the dealer also buys cars, they buy used cars from places and so forth. So that's what, so when we're talking about the pressure, what is the pressure being created from the customers? And it's an interpretation, it's an algorithm that looks at them. So nobody tells you this. Nobody tells you what the pressure is, or when you do a trade, they don't tell you, this was Mr. Smith buying from Susquehanna. Like that information doesn't exist. So you have to interpret it based on the surrounding information. And we use like 50 different rules to analyze the markets to try to make that interpretation that most likely this was a customer buying from a dealer. If we can't make that determination, we just skip it. We don't assign it a bullish or bearish. We just say it's noisy. We can't give it we can't assign anything to it. But yeah, when you look at the order sentiment, and I'll go back here.
I guess my problem with what I would say was I was kind of, by viewing this, it was kind of, I mean, seeing that it was bearish pressure being built up and the stock moving up and trying to, make a trade based off of that, it's kind of tough. Basically what I'm trying to say is because, if I'm doing the research on this for multiple days and I'm seeing the bearish and then I go in bearish on a trade, it's kind of, and the opposite is happening. You see, I'm trying to explain it. So it's kind of hard to interpret.
Right, because and do you look at all the other information, like where it's coming from, what strikes and so forth?
I try to do the option chain, open interest, volume.
Right. And this explains it right here. I just went through an SPY example.
Yes.
And really quickly, I'm seeing right where that bearish pressure is coming from. I'm seeing that these are expiring options. These are not, this isn't a call 5 years or 10 days or whatever out. It's not betting on any particular event. And this is typical. Even if you see, you may see bearish trades, which are typical because think of it this intuitively. What do you think a retail investor would do when the stock is going up with options?
Are they buying calls?
They're probably buy rate, right? Typically what you see is a retail investor who owns a stock and the stock is going up and they think that, okay, I want to lock in some of these profits. So what you typically see is call sellers. This is probably, you rarely see a retail investor that owns stock and the stock is going up, they buy more calls and double up. That's not a typical, that's not typical. Usually you see retail investors that own stock, as the stock moves up, they're offering calls and buy rate. And this is a strategy that's promoted across the industry very heavily, right? So as the stock going up and there are call sellers, I would expect that. I would probably be surprised the other way.
Okay.
Then I would probably say, okay, what's going on? Why is there so much call buying as the stock is going up? Where is it coming from? Is it Reddit? So you still want to see the explanations, but if a stock is going up and you're seeing call sellers, I would say that that's expected.
Okay.
Yeah.
All right. Thank you so much for your help. I appreciate it.
Yeah, no problem. Yep. And again, look at the details, right? That's why you want to look at where is it coming from? What are they doing? Is it even unusual?
Yeah, it's just you're helping me change the mentality. Thinking about. So thank you.
Right. Yep. No problem. Well, thank you for the
Ronald. Bring a question every day. Very thankful that you came in. Very brave for coming in. I know the first time is always a little tough, but it was a great question, and bring them every day. We appreciate it. Thank you so much.
Thank you, guys.
All right. Thank you. Bye. All right. Bye.
With that, D, it is now a minute away from the opening bell. Great job.
Yep.
Thank you so much,
All
buddy.
Right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Yeah. Special thanks to all you chameleons for coming on, staying with us, and Ronald, big one for coming on today and bringing the question. That was great.